Market's still a little bit depressed after some potentially concerning comments by Fed Chair Powell yesterday after FOMC. We've also got, unfortunately, some rising geopolitical tensions, but this is what I'm looking at right now. This is where I see things going over the next 24 hours or so. Let's jump straight into it. So here we have Bitcoin currently trading at a price of $109,700. If you caught yesterday's video and the video before that, maybe even the one before that, you will know that we were expecting a little bit of a cool-off after a nice, strong bounce from the lows that we put in after that massive liquidation event a couple of weeks ago. Unfortunately, the stage was already set for that. Okay, we did see this coming again. I think a lot of people got very excited when we started breaking, particularly this high here, when we entered a technical uptrend from the lows put in after that massive sell-off. But as always, as we seem to be noticing more and more lately, a lot of people jumped in on that move after the fact, reactively with too much leverage, and a lot of those long positions were in fact liquidated. That means they were forced to sell onto the market, forced to dump supply onto the market. And so when prices came cooling off just a little bit, as they would in a healthy market, free from over-leveraged positions, we instead saw big crashes to the downside. And that was further spurred on by some of the broader macro landscape that we've got unfolding right now. You will know I was also anticipating 108K for a nice bounce. That is why I've left this arrow that I drew on the chart here the other day when I made that prediction, we'll call it. I don't know if we can go as far as prediction, but I did say that 108K was looking likely. So I've left the arrow on here and we got the bounce initially. Okay, the reason why I thought 108K would be a good place for a bounce was because of this volume profile. So what the volume profile essentially shows us is how much business was done at particular price levels on the chart. This gives us another layer deeper of data versus just price against time. And the point of control of that fixed range volume profile drawn from the bottom of the move down to current prices was about 108K. And this can very often form a magnet for price because the market is familiar with those prices. Okay, a lot of volume has been done at those prices. A lot of business has been done at those prices, and the market tends to favor prices where a lot of business has been done. And sometimes that can give us a nice bounce. So we were looking for the market to come down because we knew there was a lot of leverage in the market. We knew that the price where it might turn around because there was a lot of liquidity, and that means a lot of buy-side liquidity, was about 108K. And we did in fact see a nice bounce from that yesterday. Look at this. So we came down to $107,900. Depends on the exact venue you're looking at. I'm here on the Coinbase spot chart, and we saw a nice little bounce from that, which topped out at about 3.4%. So that could have been a nice scalp for someone if you're interested in that sort of trading. For me, I'm looking to build into a long position right now. That is why my long trade is still open. We are now up 1 BTC on that trade, 20x long. And I did, in fact, add into that position yesterday. I didn't bid 108K as I was planning to. Unfortunately, I was out and about. There was other stuff going on, but I did add to that long position, and I'm glad that I did. Okay, that was a sensible place for me to add into that trade. We saw what was likely to happen. We planned ahead for that, and in the moment I reacted. I was a little bit late to that trade. I got slightly higher pricing, but that has brought my average price for the trade down, which is what I was looking to do. So now that position, the average entry price for that is $113,277. Still a little bit higher than I would like to be in that. We did start getting into that trade during the big historic $19 billion liquidation event with limit orders around about here in the book, right? We saw that that was a possibility too, and we started getting into that trade, but a little higher than I wanted to be. So I'm happy to average down into that position. I still consider overall this to be a nice big buying opportunity. So what else happened yesterday? Well, after that initial 3.5% bounce, we did start to sell off again. And as always, I feel like a stuck record for saying it, but plenty more long liquidations going through. You can see $765 million worth of long positions liquidated over the last 24 hours. Now, in my opinion, this was spurred on a lot by FOMC and not necessarily the rate decision. Okay, the Fed did decide to cut rates by a further 25 basis points, but as we know, there was already a 98% chance of this happening, as predicted by FedWatch. So the markets had essentially priced that data in already. What was more concerning and more uncertain to the markets was the comments made by Fed Chair Powell at that meeting, okay? And as Bloomberg is reporting here, no, fortunately, I do not pay for a Bloomberg subscription, but it's the headline that's important, okay? Powell's December warning exposes hardening divisions at the Fed. Now, what he said in his closing comments after that was essentially alluding towards a divided Fed on the 25 basis point rate cut decision at this meeting. Did actually go through, but more importantly, he brought into shade whether or not we might get further rate cuts going into the rest of the year, or the end of the year, as I should say. So he said, somewhat verbatim, not exactly in these words, but he said, essentially it was not a foregone conclusion. In fact, it was far from a foregone conclusion that we would see another 25 basis point rate cut in December. And that is what has basically thrown off markets. So you can see now FedWatch is predicting just a 70% chance of another 25 basis point rate cut at the next FOMC meeting in December. Why do we like rate cuts? It means cheaper money. It means that investors get less return for holding their money in yield-bearing assets, and they tend to then rotate assets into risk assets. They tend to rotate capital into risk assets, like stocks like the S&P and crypto as well. So you can see also S&P down on that news, and that is what you need to pay attention to. Is markets are always looking ahead, right? So the theory of efficient markets essentially dictates that information runs freely in a market, okay? It runs efficiently from source to consumer being us in this case. We're the ones trying to trade the market, and we're trying to consume news data. And essentially, efficient markets means you won't hear about news before someone else will hear about news. So when you've got something like a 25 basis point rate cut at a 98% certainty, that means the market is already expecting that data to happen. Unless they get something unexpected, it's unlikely that they're going to then react to that news. Oh, great, we got a 25 basis point rate cut. Let's all buy stocks. Doesn't work like that. People already buy stocks ahead of that on the assumption that we're going to get the rate cut. And now things are looking a little bit less certain for further rate cuts into the end of the year. That is why we are somewhat depressed in risk assets. Also, unfortunately, rising geopolitical tensions. We've got a story over here. Trump directs the Pentagon to match Russia and China in nuclear weapons testing. I don't need to explain why that is not a good thing for markets. Markets do not like war. Markets do not like uncertainty. And this is just essentially escalations of tensions between the US and Russia. I won't get into the details of this right now because I don't actually think they're particularly important. Certainly not right now for making trading decisions, making investing decisions. But on the flip side of that, we do have some resolution on the initial tariff rate increase threats that Trump made on China, which is what set the cascade of long-side liquidations going into the last couple of weeks, brought that massive down day, massive $19 billion liquidation event. Trump lowers tariffs on China and announces to end the rare earths roadblock after President Xi meeting. Here we go, a 12 out of 10 meeting between Trump and Xi, but not a done deal yet. Okay, so we are seeing resolution on that. We are seeing the taco, Trump always chickens out. This is good news, okay, but it is somewhat brought into perspective, perhaps, by Fed Chair Powell's rate cut decisions and also by these rising geopolitical tensions, which markets do not like. Now, bringing it back to crypto and bringing it back to Bitcoin specifically, we had another $760 million worth of long liquidations over the last 24 hours, as we've already spoken about. But look how the liquidation map is planning out. So if we zoom this into the 1 day, you can see that it is not looking great in the moment. Okay, we do have an imbalance of leverage longs in the market. As always, guys, the lemmings, as I like to call them, love to jump in on green candles like this. And unfortunately, as I've theorized in the past, until we reach a point of max pain in the market, there are going to be big players exploiting this, okay? And it is very, very easy for them to do so when the retail market continually trips over itself and wrecks itself by jumping in on too much leverage, not managing risk effectively. I wouldn't be surprised and I wouldn't be scared or shaken out if we saw further moves to the downside in the moment from here, from where we are right now. The good news is that, as always, that short side liquidation risk is stacking up. So if we look at this on the 30-day time horizon now, you can see the total opposite picture, okay? And every time we get hammered down on nets, right, on average, on the broader time horizons, we see this very, very strong bolstering of the short liquidation risk in the market. And the short liquidation risk is what the bulls will get excited about when we start coming up, when we do finally find liquidity from where prices are right now, that buy side liquidity. The exact opposite of what we saw in that massive down day a couple of weeks ago, that massive historic liquidation event. We could very well see to the upside where some of these shorts start getting wrecked and the exchange starts liquidating their positions, buying Bitcoin on the open market very suddenly. Sudden increase in demand, prices will follow up from there. So I'm sitting in this position right now. I wouldn't be opposed to adding to this on further moves to the downside. I think we've got to be aware of this long side liquidation risk, further long side liquidation risk from here. It's not a massive imbalance, okay? And I'm always looking to the upside as well, right? Because we have got a massive amount of short stacks in the market. And I think it's fair to say that we are due some short liquidations on this market as well from here, particularly as we've just seen the longs getting hammered again and again and again. As I say, definitely wouldn't be surprised, definitely wouldn't be shocked if we saw further slips from the downside, but eventually we are going to come round to find that buy side liquidity, and I think that is going to catch a lot of shorts off guard. So, as ever, that's just my opinion, just what I'm looking at. I am not particularly scared or shaken right now. Once again, we see this liquidation playbook happening once again, day in, day out in the markets, but those loops, resolution loops on that cycle seem to be tightening generally over time, and there is a massive short liquidation risk to the upside, which will eventually come to bear if history repeats itself again. As always, just what I'm looking at, purely my opinion, only sharing it with you for entertainment purposes, but thank you so much for watching. Plenty more to come. Catch you in the next one.